Good morning, everyone. Today, let's talk about the recent developments in the Middle East and their impact on the global financial markets. Over the weekend, we saw an increase in military conflict in the region, which has raised concerns about the supply and prices of oil. As a result, U.S. stock futures have slid in Asia, and there has been a surge in demand for safe haven assets such as treasuries and gold. Analysts are predicting higher oil prices and a possible disruption in oil supplies from Iran, which could push Brent futures above $100 per barrel in the short term. This has led to a significant increase in oil prices, with Brent climbing $4.24 to $88.82 a barrel and U.S. crude climbing $4.26 to $87.05 per barrel. Gold has also experienced a rise in demand, reaching $1,848 an ounce. In currency markets, the yen has been the main gainer, while the euro has weakened against the yen. Moves overall have been modest. The cautious mood in the markets has also led to a rally in sovereign bonds, with 10-year Treasury futures rising by 11 ticks, indicating lower yields. The recent developments in the Middle East have had an impact on global equity markets, with S&P 500 futures and Nasdaq futures both shedding value. European markets have also been affected, with Euro Stoxx 50 futures slipping 0.4% and FTSE futures losing 0.1%. Looking ahead, investors are keeping an eye on the U.S. inflation figures later this week, which are expected to have an impact on interest rates. The Federal Reserve's minutes from their last meeting are also due this week, which will provide insights into their stance on rates. Early market indications suggest that developments in the Middle East could lean against further rate hikes and potentially hasten a policy easing next year. In addition to these global events, China is returning from a holiday this week with a deluge of data, including consumer and producer inflation, trade, credit, and lending growth. This data will further shape market sentiment and expectations. As we start the corporate earnings season, there are 12 S&P 500 companies reporting this week, including J.P. Morgan, Citi, and Wells Fargo. Analysts at Goldman Sachs have predicted 2% sales growth, marginal contraction in margins, and flat earnings per share compared to last year. That's it for today's update. Stay tuned for more market insights and developments throughout the day.